question is, how do you value a small business? When it boils down to it, business value is what someone will be willing to pay for it. My name's Graeme Brenssell, and I'm a business broker with Link Business. Welcome to the series on selling your business for the best possible price. In this second video, I'm going to talk you through the steps of valuing a small business, which is about 95% of the businesses in New Zealand. Getting an appraisal of the value of your business is the first step to planning for its sale. You may be ready to sell and exit your business now, or you may be planning to grow it for a few more years before putting it on the market. Either way, understanding its current value is the first step in planning and protecting your future. By doing this, you'll have the information that will help you determine whether your business today meets the financial objectives in a sale, and if not, it will allow you to begin the process of working out the improvements necessary to improve its value, and also work out the amount of time necessary to achieve these. So the question is, how do you value a small business? When it boils down to it, business value is what someone will be willing to pay for it. But when it comes to landing on a defendable value, two of the most common and straightforward ways to go about it are, firstly, the earnings-based valuation method, and secondly, an asset-based valuation method. At Link, we appraise businesses using both, but usually, depending on its profitability, most businesses are valued using the earnings-based method. And that's the method that I'll walk you through today. This method is a two-step approach where you calculate a seller's discretionary earnings and then apply a multiple to the earnings to arrive at the business's estimated market value or the appraised value. The equation seems quite simple. SDE, or seller's discretionary earnings, times the earnings multiple equals the estimated business value. But in reality, the calculations behind it are quite complicated. So let's work through the first step in the equation, calculating seller's discretionary earnings. In its simplest form, seller's discretionary earnings, or SDE, is the annual cash or annual earnings available to one owner. It is also known as cash flow, and it is how much cash the business actually makes for the benefit of one owner in a normal year. To calculate seller's discretionary earnings, we normalize the profit and loss statement by making adjustments to the net profit to reflect true seller's discretionary income, or the true operating income to the owner. We do this by making adjustments to the profit and loss statement by removing income that a new owner would not receive, and we also add back expenses that a new owner would not incur in the normal operation of the business. Generally, the adjustments made are, firstly, the add back of expenses that were deducted for tax, interest, depreciation, amortisation, resulting in what we call an EBITDA, earnings before interest, tax, depreciation, and amortisation. Very few small businesses in New Zealand have amortisation, but if they do, then you've got to add it back. Secondly, we add back non-recurring expenses by excluding unusual and one-off transactions of the business. For example, extraordinary legal costs, say advice for a personal grievance, valuation fees for plant and equipment, or even possibly business coaching. Thirdly, we add back discretionary expenses. These are expenses that benefited the owner directly, such as entertainment, possibly private insurance, personal motor vehicle expenses, and donations. Remember, all of the expenses that you're adding back must be justifiable to a buyer and to their accountant. Then we make adjustments for the owner's income by adding back income that has been expensed in the P&L. Usually shareholders' remunerations or wages and salaries that are included in the P&L. If there are two or more working owners in the business, we make adjustments to ensure the second owner's salary and wages are included in the accounts as a deduction at market rates. The result is the business's normalised profit, and this more accurately represents the true performance of the business. This profit, known as seller's or owner's discretionary income, is what we work with. Finally, if necessary, we will also put weightings on particular years to ensure the accurate representation of a normal year. So we arrive at the normal earnings for 1 year for one working owner of the business, known as seller's discretionary earnings. Conceptually, SDE represents total cash available to the owner in a normal year. Now, this is an important concept to understand and forms the base number for appraising small businesses. It is this number that we multiply to a market-established earnings multiple to arrive at the business's appraised value. The second step to this method is establishing the earnings multiple. The earnings multiple used in small business appraisals in New Zealand is generally a number between 1 and 3. Businesses with the weakest potential and the highest risk have the lowest multiple. Businesses with the strongest potential and lowest risk have the highest multiples. To determine the multiple for the business, we do two things. We compare data from other similar businesses that have sold, and we assess and take into account factors that are likely to indicate attractiveness to buyers or risk to buyers. We evaluate the condition of the business. We look at major risk factors, including annual earnings, annual revenues and the profits, and obviously the trends on these, the business's customers, the products that are being sold. Is there a recurring revenue component? What's the staff like? Where is it located? The business brand, is it strong? Does it have a good reputation? Are there barriers to entry? The risk profile to the industry? There are many, many, many factors. It's quite comprehensive and complex. So using data from market comparisons with sales from similar businesses and the complex assessment of the conditions of the business and the industry, a multiple is established. Now we have the SDE and the multiple for the business, and we undertake a simple calculation to arrive at the value of the business. SDE times earnings multiple equals estimated business value. Look at Link Business, which is the largest business broking firm in Australasia. We have a large amount of accurate sales data, and we've developed a tool called a value tool, which brings together the steps in the process, including all complexities of establishing multiple. The system applies complex algorithms which have been developed in association with the University of Auckland to calculate an accurate appraised business value. It does an incredible job in establishing the value. And quite frankly, the results speak for themselves, with 95% of businesses sold by Link selling within 5% of their listing price. A final question is, now that I have my appraised market value, what price should I list my business at? Because business buyers negotiate downwards from the business asking price, the sale listing price is often set up to 10% over the appraised value. And this is to take into account the effect of buyer negotiation. So get in touch with the broker to get your plan underway. And if you have any questions regarding selling your business, or you just want to have an obligation-free chat about planning, please feel free to contact me. Thanks for watching. If you like this video, please hit the subscribe button or give me a thumbs up, and I'll let you get planning. My name's Graeme Brenssell. I'll see you in the next video.